Hello, fellow traders. 'Tis I, the Rumpled One. It's Thursday, April the 18th. The year's 2019. Let's talk trading. Horizontal lines, Wick zone. Okay, I hope everybody's been enjoying the Wick zones this week. Oh, there's really not too much to say about the Wick zones. It's a simple breakout trade, but there is one thing that's you have to keep in mind when trading, not just the wick zones, but anything. Just because you put a trade on and you follow your method and it's a winner, that doesn't mean your method is sound, okay? I'm talking logic when I'm talking sound, logically sound. And on the other hand, if you put the trade on and you lose, it doesn't mean that there's anything wrong with the method. You have to understand we're dealing with the market. Sometimes you're going to win and sometimes you're going to lose. And I think one of the things that really trips up traders is they have a desire to eliminate losses. On the surface, that seems like the logical thing to do. You're trading. You want to win. You don't want to lose. But what happens is many traders delude themselves and they try to filter out all these losers when, the market is going to give you a random string of winners and losers. I mean, you don't know what that sequence is going to be. So trying to filter out those losers is usually counterproductive. I mean, and it's really easy to see. I would say one rule of thumb is the more indicators, the more chance people are trying to filter out the losers. I mean, I don't see why people use, all those squiggly lines, the upper chart, the lower chart, the side chart, the overlays. I mean, you just obliterate your ability to see price. And that's the beauty of the wick zones. You can see the wick. You don't need a bunch of gobbledygook on your chart, and you trade accordingly. But there is one thing I don't mind seeing on people's chart, and that's if they're using some type of money and risk management indicator. To me, that's an indication that they're on top of their game, or at least they're, headed in that direction. So just remember every trade, money and risk management. Okay, and as we bring up the weekly chart here on the Euro Yen, and those tuning in late, all gaps filled this week. You can see here in and out of the wick zone. So anybody short the wick zone aiming for that midpoint would have paid off by about 78 pips coming out of that upper weekly wick zone. I mean, how could it be so simple, right? But you can see here it really is simple. Here's the daily wick zone. Price entered the wick zone and came out, entered the lower wick zone and came out, and it, boom. there's nothing else that you need here. You just need to know where the wick zones are. It's nothing fancy. Don't need a bunch of indicators down here at the bottom. You don't need a bunch of overlays and squiggly lines here at the top. I mean, you put your trade on and either it's a winner or it's not. It doesn't get any simpler. It really doesn't. With the wick zones, you've got a line at the previous day's high, the previous day's candle top, the previous day's candle bottom, and the previous candle's low. And if price comes to that line, you trade in the direction price is moving toward that line. Once it gets in the wick zone, because wick zones are breakout trades, not reversals. That's simple. And I don't know why people struggle with it, other than the fact that they want to bring a bunch of stuff to the table or to the chart that has no bearing on it. I mean, why do I need moving averages? I don't. And you can see here, once again, breaking out of that lower wick zone, right now 52 pips. And look at this, only one pair over 100. Another anemic day. But the euro yen's clocking in at 91, so that's not too bad. But I mean, really, if you'd just been taking these wick zone trades this week, I think you'd be up a few pips by now. I mean, price entered the upper wick zone, came out, entered the lower, came out. I really, I don't know how you can make it any simpler. And you can see here on the tick chart, price is just heading down. And since I've turned on the computer here for the Einstein traders, you can see here we've got a short happening, but the ask hasn't gotten below there, so you're still in the trade. I did add another chart here for my good buddy Lem. He posts on a couple of different forums out there. He asked me to do a double wick indicator. Now, what the heck is a double wick indicator? Well, see, I've got it set up for the daily wick right now. And so what happens is, let me explain this. Hey, this is another indicator I don't have, I'm not turning off here. Interesting. Guess I'll have to do that. Well, I'll come back here. See, a double wick would be you take the wicks and the high, whichever high is higher, and whichever top is lower, and you make a wick zone out of it. And then here at the bottom, whichever low is lower and whichever candle bottom is higher, and you make another wick zone. So it's kind of like two wick zones are better than one. So if price gets in that wicks into that double wick zone area, then you just might be able to have a trade here. And these lines, in case you're wondering, those are just the fib lines. So you got the halfway point, your 61 and 78. And you can see here, or 61 and 76. And you can change those levels if you want. And that's a 2018 indicator. And Lem, if you're watching this video, let me know if you're still trading this. I don't know if you are or not. But you see here, he thought maybe that, having these fib lines here, you can see fib retraces within these zones and whether or not price is respecting them. But that was his take on the wick zones. And one of the things you can do here is you can make it to a current period if you like. So whatever time frame you have on your chart, it will plot the wick zones accordingly. So you can see how that would work here. So once again, you see here, this is 2 candles ago. That wick zone was below there. So here, I guess it's the lower of the two and then the higher of the two here. And so basically you're saying, okay, which price action in this area was stronger? But, even without the indicator, you can just look here at the wick zones. I mean, right here, got in that wick zone, came out, got in that wick zone, came out. See here, it entered that wick zone, came out, entered that wick zone, came. It just happens. Well, we know how often it happens because we've got the indicators right here. And for those of you wondering, those way back in 2014 is when I was working on the wick zone. But you just know price isn't staying inside that wick zone. And I think we were just looking at the hourly chart. You can see here, 71% of the time price closed outside of a wick zone. Doesn't like staying in the wick zone. And we have the wick zones here. And you can see here once again price leaving a wick zone. And checking in on the range, you see 91 for today, but exiting the wick zones. And that's one thing I like about the dynamic wick zones indicator, because if you're trading wick zones, it shows you exactly where price is according to the wick zone. Now, what you can also do, you can change it. Like if you want to use the daily wick zone, you can see here where those wick zones were happening on the daily chart. But that's only to be used if that's the type of trade you want to trade, looking at those wick zones. But see here, we're just looking at the hourly wick zones. So, I mean, how, I guess you want to know, well, geez, you're showing me all this. How do I trade the wick zone? Well, it's simple. You just use the normal wick zones, and price comes in and you exit. So I guess there's always more than one way to skin the cat, right? So if you're one of those traders that has to work during the day, then if when you get ready to leave for work, or you're at lunchtime and you bring up your screen, if you see price in the wick zone, then you can put in a buy stop and a sell stop. Of course, you have your stop losses, and you can put your take profits on there and see what happens if it triggers. I mean, that's just how it would work. Then if you're sitting here watching it live, then every time price tries to come out of the wick zone, you take that trade, you put your stop loss on, and then you manage that trade. It's not difficult. And as always, I would suggest you trade one pair until you master it. And then after you master it, you might not want to trade any more pairs because you're too busy making money using the method. And we've looked at we've analyzed the price here a couple of days ago. We went over this chart. Let's see, but once again, price never left the wick zone. Very few times. Very few times. Let's see. Open inside the lower wick zone. See, what did we do? This would be open. Oh, this is all the lower stuff, but this would have been an upper one. So we'd have to change the analyzer for that one. Or we could find a pair possibly. And then once again, frequency distribution, the previous low minus the low, and the high minus the previous high. So you can see here, we didn't break out of that, but we definitely broke out here.